We've been talking about different types of municipal bonds, and in our last video we talked about general obligation bonds, otherwise known as GO bonds. And GO bonds were backed by a municipality's power to tax its citizens, to raise property taxes if need be, to collect the income, to service the debt. Revenue bonds, on the other hand, are backed by a very specific revenue stream, right? So let's say, for example, that a state decides that they want to issue revenue bonds in order to build a new highway. They're going to build a toll road. So in that case, the revenue bond would actually be attached to the toll income. So let's just say this is our pool of funds that we get from the toll income, and that is actually what's being pledged here to service the debt, right? So this toll income is going to service the debt. Now, this can be riskier than a general obligation bond, because now if this toll income doesn't materialize, then the investor is just out of luck, right? So this toll income, if it's lower than what's expected, could be a serious problem. And they can't just say, well, look, we need you to raise taxes or so forth, right? Because it's a revenue bond. That's the whole idea, is that it's attached to this income stream, right, that they're going to generate from this toll road. So everything is dependent in terms of the debt being serviced on whether or not that income comes in as expected. Now, you might think, well, what about something like maintenance, for example, right? So you're going to have to maintain that toll road. Now, maintaining that toll road is not going to generate any toll income, right? Building the toll road, that's going to lead to some income, right? But when you go and say, well, we're just going to maintain it, we're going to fix it up a bit, that's not actually generating any income. So what you can do then in that case, the revenue bond will actually they'll earmark some of the funds for maintenance, right? So they'll earmark some for maintenance. And what that's meaning is they're saying, look, a portion of this toll income is actually going to go toward the maintenance, right? So, and then basically they're ensuring that even though doing maintenance on the road a couple of years down the road doesn't actually generate income, they're ensuring that they're going to have enough funds to do that.